Hello and welcome to another episode of FinTech Focus TV with me, Toby Babb. Today I am absolutely delighted, flown in especially from New York City.
That's right.
Tim, how are you?
Good to see you, Toby. Thanks for having me.
Listen, lovely to have you on the show. We spoke about this in New York at the start of the year.
Yeah.
Sat down and just shot the breeze about it all, and it's a fascinating area, a fascinating story that you've been getting involved in, and I'm really excited to share it here now. And thanks for coming over. Not especially flown over for this, but
I came to see my 91-year-old mother. It's her birthday.
Oh well, happy birthday!
You were second on the list.
Very. I'll take that. I'll take second to that one. Tim, let's start off with telling us a little bit about viaNexus and your story and how you arrived here and where you're at the moment.
Yeah, it's been a whirlwind. My broader background was sell-side research at UBS for many years. Moved into fintech investing for the investment bank in the good old days. When Hudson Street at Goldman was investing, we started investing. And then we had the financial crisis and just about survived that for a couple of years, and then left and joined Thomson Reuters and got into not just investing in fintech, but buying fintechs, investing in companies, helping drive the content strategy at Thomson Reuters, which had incredible data assets. So I was running content strategy there. Then I ran partnerships, which is really where my network of partners came from. There's a lot of firms who have done incredibly well, and I saw them starting out looking for data, and they've grown big businesses. AlphaSense is one of them from the early days. After doing about 9 or 10 years at Thomson Reuters through Refinitiv, just before LSEG, I left and joined an exchange in the US called IEX.
Yeah.
So if you've read the book Flash Boys, that was the Flash Boys guys. Super excited because I was working for a very well-funded exchange, building one of about 4 businesses they were incubating. It was a data business. And that was an API-first data business distributing their real-time price, plus a bunch of other data coming from primarily one of the big vendors. Then COVID happened about 3 weeks in, and we went remote.
Timing's everything.
And actually that was kind of good for the business because a lot of people were sitting at home wanting to build stuff. And if you had some coding skills, the meme stocks were trading a lot, people were looking for things to do. And we really kind of saw hockey stick growth because it was a product just made for that era. Lots of people thinking about building fintech companies. Left after about 18 months, did some consulting, and then about 15 months ago, became aware that the asset was up for sale or potentially being closed. Myself and a couple of friends, including the CTO over at IEX Cloud, which was the name of the business, we acquired the asset. So we didn't acquire a running business, we acquired 3 million lines of code.
Yeah.
It's been a great journey since then.
Isn't it amazing how that's only 15 months ago?
Yeah.
I know we spoke about that a couple of months ago, but it's just phenomenal how far it's come already, isn't it?
I think it really started initially when I put calls out to all of the partners and contributors, the external partners in that venture, and said, hey, in 2 weeks we're going to take ownership of 3 million lines of code. Uh-huh. Can you help us just stand it all up? We couldn't negotiate any deals, and everyone without exception said, yeah, we want to help.
That's always good validation.
We called up Google, we got credits, as is normally the case. The whole platform was built on GCP, and we'll talk a bit later about what the platform can do. But we literally stood it up the Monday after the Friday we acquired it, because if you don't do that, it's going to get harder and harder with time.
Course, yeah.
That's not to say we had a viable business at that point, because we then decided to take our time and figure out what we were going to do with this rocket ship, where we were going to take it. And we knew there were a few things we didn't want to do. We didn't want to be a typical data aggregator and go out and buy wholesale a lot of data. Economically, that doesn't make sense. So we came up with 2 or 3 or 4 ideas, and we said maybe one of them will work, and like most of them are working. So we now have a capacity and growth opportunity, a capacity challenge, and a lot of opportunity. And of course, just in 15 months, the world has changed unbelievably, and that's also helped to open up
in many ways
a lot of opportunities. I don't think I've ever seen change like this.
Yeah.
So that's the short version of the journey. So I never thought, at my age I would be an entrepreneur and a co-founder, but it's always been on my bucket list.
Yeah.
So when I asked my wife, can I do this? She said, look, if you don't do this, you'll regret it.
Yeah.
So and you
can see it because you're so passionate about this as well, aren't you?
Literally, my wife said, "You've got a spring in your step, which you haven't had for a while."
Yeah.
So I feel, very, very, lucky to have had this opportunity. Let's see where it takes us.
Well, exactly, and if it's moving at this sort of pace, it's kind of the startup world plus the AI world. It's definitely dog ears, isn't it, in terms of where it comes through? So,
but if you think about it, how many new ventures have come about in the last 3 or 4 years because of AI?
Yeah,
we'll probably talk about AI. I think we should talk about AI.
Yeah, it pops up in most episodes these days.
Look at, there's dozens and dozens of challengers or firms with new takes on data.
Yeah.
And it's a very, very exciting time. And, if I was a big incumbent, kind of scary too, because you're seeing lots of firms move very quickly.
Yeah.
And, having come from, a number of big companies, I know how hard it is and stressful it is when you see the world
all this moving and you've got to move.
Yeah,
you haven't quite got the nimbleness. And I guess that comes down to this sort of structural shift in market data we're seeing at the moment. And expand on that. I know that's something you're seeing as well, right?
Yeah. Look, I think we've had 10 or 15 years of consolidation in the market.
Yeah.
So you've seen firms like Market and Thomson Reuters and FactSet, all those big firms, S&P, have been acquiring assets, and good on them for realizing that there's a lot of value in owning data. With that consolidation, I think has come the desire for customers to see more competition.
Yeah.
Again, I think big firms, find it hard to adjust or take advantage of new things, and maybe they want to be fast followers. Maybe they just go, no, we're just going to pick up our recurring revenue. But I think that we've just seen the beginning of a shift. The $50 billion kind of industry is looking for new sources of content.
Yeah.
I'm pretty close to the alternative data space. That's been growing quite gradually, but now again with modern technology, everyone wants to have new signals.
Yeah.
Everyone wants a new take. It's not just about mining the filings and the more commoditized data sets. And I hate that word because data, I don't think will ever commoditize, but certainly there's demand across the curve, be it in pure market data, from exchange data right through to alternative data, for more of it.
Yeah.
We're talking to a number of hedge funds that can't onboard data fast enough.
That's all the rhetoric I'm getting at the same time as well.
And again, that's great for the ecosystem. It's great for firms that have data. It's great for entrepreneurs that have maybe left a big company, have got an idea and want to build a new data set. You're seeing data sets like the prediction markets, new data set.
Yeah.
We're working with a team that have, building out a set of data, and they need help with distribution. So we're working with them on that. So I think, it's the supply side, more and more data available. It's demand, which is more firms looking for more data. And then, I think the workloads are shifting as well. I think, and I put this in the piece I wrote in your magazine, and I'm not saying SaaS is dead, but Satya said that 18 months ago.
Yeah.
And I think he might have been onto something. I think what you're seeing, you're not seeing yet a big unbundling, but what you're seeing is new use cases that are outside the terminal, that are outside the desktop.
Well, this is the interesting debate on that SaaS is dead piece or otherwise, and you've got various different levels of the hyperscale about which end it is. So some will say, right, that's it, game over, it's a different world now. Others are talking about SaaS being augmented, by AI, etc. I'm probably somewhere closer to that sort of world from what I'm seeing at the moment. But it's interesting you say that, and where it looks at, and SaaS is there is not usually too far from it.
Well, I think when he came out and said that, he said, look, we're selling our CRM platform without a front end.
Yeah.
That's a clue, right? It's about the data and the nature of how that data is being delivered into workflows.
Yeah, of course.
Now, look, what you don't want is to have Claude build a desktop every day, right? Write software every day. But having Claude answer certain questions, or maybe pull up components of a desktop and enable you to configure that desktop, I think that's a big change. And we're already seeing, I don't know whether you played around with Claude and Claude Finance, but they are significantly ahead of ChatGPT and the other LLMs. And
changing almost on a weekly basis as well.
There's new stuff coming out. And I've just started writing a piece about the day in the life of an analyst, because I used to be an analyst. And, I'm doing an hour at a time.
Yeah.
And things like, preparing for a meeting with the CEO.
Yeah.
That used to be reading filings, listening to earnings calls. It was updating a model. It was, reading the latest press release. It was maybe talking to a couple of clients. And that was a multi-day process.
Yeah.
And if you have access to the right high-quality data, together with Claude, and Claude is increasingly being loaded with skills that they're putting into their system. So Claude skills are things that you as a user can, if you have a repetitive task, you can build a skill and then it will do it much better and more efficiently next time. But they're injecting skills into the platform. So there's already an equity research skill. So you want to do that prep. All you really need is access to the data.
Yeah, exactly.
And I'm going to put out a piece in the next few days. It's not just the quality of the output; it's just the usability of it.
Yeah.
And I think that should have some of the big vendors really thinking about, the safety of their, kind of incumbent products.
Yeah.
And look, you're seeing them move, right? They're all building connectors into Claude and into other. But the thing is that their connectors are sitting alongside our connectors, right? So I've got some shelf space now. Smaller firms that, have data assets, or maybe smaller aggregators, smaller tech companies like viaNexus, can get shelf space.
It's a level playing field all of a sudden, isn't it?
It totally levels the playing field. And maybe it tips it, against firms that are just slower moving.
You mentioned viaNexus there, and it's a good time to bring that back into the conversation. So, as you say, 3 million lines of code acquired, working out where and what you fitted it into it all. Tell us where viaNexus enters stage left and what you guys are doing.
Yeah. So we took about a year to, tighten up the tech, to really decide our strategy. We decided fairly early on that there was a supply and demand opportunity. So lots of independent data sources that were as good as the incumbent aggregators, but couldn't get shelf space because they competed directly with those big products. And then on the consumer side, there were every from kind of prosumer people wanting to build things like the old IEX days, but also fintechs needing high quality data at a reasonable price, right through to very big firms that have just got extraordinarily high market data costs looking for competitive, sometimes higher quality product.
Yeah.
So the starting point was, can we build a marketplace? Can we build Amazon for data?
Yeah.
And how do we add value to the data? And one thing I learned at Thomson Reuters was, people really liked TR and Refinitiv because it was a one-stop shop.
Yeah.
So you could get fundamentals and estimates and prices and, evaluated prices and, so if you're a market data buyer, you'd be able to get it from them, from S&P. And so if you're building a marketplace, you've got to build, it's almost like a supermarket. You've at least got to have the frozen food section done.
Yeah.
Right? So we started where a lot of firms start with equities, US equities. We have some global equity content. But that turned out to be a good move. So we ended up with, a kernel of data sets that kind of work together across a number of, popular use cases. And but the real value add of the best platforms out there is that they enable clients not only to buy the data from one place, but to consume it in a consistent way.
Yeah.
So I would say the big value add that we add as a marketplace, unlike a kind of a snowflake type marketplace, which is really just a set of files in a big data lake, we normalize the data. So we get data from, a growing number of data partners, and it all comes in different sizes, shapes, frequencies. Some of it streaming from an exchange, some of it might be quarterly, some of it might be more like futures data if you think about the prediction market data.
Yeah.
And so you have to apply a data model that can allow consumers of that data to stitch the data together effortlessly.
Yeah.
And this is one of the things the platform's very, very good at. And the other thing is, when you're building a marketplace, it can't take you months to onboard a data set. So our technology is very, very good at normalizing and onboarding data into this big data platform we have built on GCP. That means that when it comes out of the sausage factory as a set of products, a client can go, I want those 5 products. And the APIs all look the same. They all use the same schema. If you're using Claude, or if you're using Claude Code, or if you're vibe coding, it gets really, really easy to build products because the AI doesn't have to stitch data together on the fly.
Yeah.
It's already, and it doesn't have to understand a new schema. It goes, I know that. I don't need to use any expensive reasoning tokens to kind of figure out whether that date is the 12th of February or the 2nd of December, because our dates are all in the same format, or our tickers are all in the same format.
It's fascinating, isn't it? And from what you're saying there, I can see why you're so excited and you have that spring in your step around it. But when there's such an abundance of opportunity in the space, you look at it and say, right, where is the actual opportunity emerging? And I guess that's probably the discipline around it. For you guys.
We have 3 male founders, and we're all really, really good friends. And when we started, we said, we're men, we're easily distracted, we have to be focused. We have to kind of be disciplined, and it's so hard. I think I've invested in a bunch of fintechs, and founders get they chase the next exciting thing. There are so many exciting things, and of course we've been working on the platform, building out some of the capabilities we didn't have, although it was largely a built platform. It'd been in production for about 4 years when we acquired it. We did want to shift this business model to this marketplace. And I think what was interesting was about halfway through last year, we were approached by the SIX Swiss exchange, SIX Group. And they came to us, and they'd been watching IEX Cloud. And then, and it's a small industry. We all know each other. It was like, kind of like what you're doing.
Yeah.
But we would like a marketplace for ourselves. And if you think about Amazon, we all buy stuff from Amazon, right? But really behind the scenes, there's millions of vendors.
Yeah.
And actually, if you're a vendor and you don't want to be on Amazon, but you still want fulfillment, Amazon will do that for you.
Yeah, of course.
And so we very quickly, well, the first thing is when an amazing company like SIX comes to you and shows some interest in what you're doing, you go, yeah, we'll do anything for you.
For a company of your sort of size as well, the names that we've already spoken to, it's phenomenal.
Yeah. Look, I think it helped that we had a built platform. We'd proven that we could stand the platform up and onboard both real-time data from the market but also fundamentals estimates and this wide variety of content, and essentially be a content factory.
Yeah.
So we're working so SIX is in two parts. There's a financial data business, which is run by a very good friend of mine, Marion Leslie, doing an amazing job. This is actually working for the regulated side, the exchange side.
Yeah.
And I believe there are over 300 exchanges in the world doing, obviously not just trading equities. But most of their data is distributed through intermediaries.
Yeah.
And, I think one of the reasons why, we're working with SIX, and it's a very synergistic relationship, and the team are fantastic. We're really operating as a single team, is that we're going to enable them to distribute data directly to customers. And I think if you go around the world and talk to many exchanges, they're a little bit frustrated that they don't really know who's consuming their data.
Yeah.
Exchange volumes have been gradually falling in a lot of countries, and with a few exceptions, like India, for example, which has a massive retail, flow.
Yeah, yeah.
And so I think exchanges are really thinking about how do we get our data into those wealth and retail flows, and that's a local business. Those wealth businesses, those fintechs are local.
Yeah.
So anyway, so that was a big change for us last year. It was like, we've proven that we can take our platform and move it out from a company and then stand up a new version. Can we now do a white label version? And we're only a few weeks away from proving that we can do that. So that's the real reason why I was here last week. I was in Zurich, but that's very, very exciting for us. There's a lot more to come, I think, both, with that partnership and hopefully with others.
Well, a great business to partner with as well. So there's been a fair amount of acquisition over recent years, and it always seems to go pretty well. I think they've got a proven track record of. I
mean, Acris, I think was incredible. They bought a tech company there. Obviously, they bought the BME. I think it's. I think they're the second biggest exchange group now in Europe.
Yeah.
Love the management team. Really impressive group. And I've always, because I worked for you.
Huh?
Well, I was at UBS for 13 years, and then I was at Thomson Reuters, and we had a fairly big office in Bar in Switzerland. So I feel very close to.
Yeah.
I feel I have a Swiss affinity and know the airport very well. But so that's kind of the second leg to our business, kind of marketplace as a service. And I think that's it's the same platform.
Yeah.
It's just about, and it's the same set of problems, connecting to venue data, integrating other data. Every exchange has a lot of data assets that they don't monetize.
Yeah, yeah.
Every filing that an insider makes at an exchange quite often is a PDF and it's just buried.
Yeah.
And that data is, back to my earlier point, those data sets are really in demand by the buy side, by bankers, by fintechs. Yeah. And quite often don't see the light of day.
And this is sort of the new data stack in terms of what we're talking about here. Obviously fueled by and raised up through the power of AI, which we had a detailed conversation about when I saw you out in New York at the same time as well. So I know you've sort of spoken about it there, but encapsulate that a little bit for me as well.
Look, AI changes everything, not just the way that data is being consumed. So I think, in the past, you think of the world in terms of machine-readable data, going into a handcrafted algorithm that would have a set of rules written by a data scientist and tested, back-tested. And then you'd have display use cases where you've got, traders and portfolio managers and analysts all looking at screens and pulling together an investment mosaic, and it was, very handcrafted, but also very data intensive. But now there's this new demand vector called agents. And these could be a chat agent like Claude, which are assembling data and assimilating it and and rendering that data, reasoning over that data, and coming up with a set of recommendations or actions. But we're now shifting towards those agents building software. I think the latest version of Claude was built by itself.
It's crazy, isn't it?
And I think there are a number of very large institutions, particularly large banks, who have realized that they just need to go all in on this stuff.
Yeah.
Household names have basically told their staff, you have to use this stuff.
Yeah.
So I think you've now got this kind of third consumer of data, and it's still evolving very fast. I don't think we're that far away from those agents having the authority to buy data.
Yeah. Yeah, that's interesting.
I think AI is also helping firms like ours. I have really a tiny team of people who have superpowers, and it's because we're using AI everywhere.
Yeah.
As they say, necessity is the
mother of all invention.
Yes, thank you. And it's late in the day here, guys. So for example, a firm like ours would have a team of DevOps people watching the systems, making sure everything's running, making sure that you're not running out of disk space or software is being patched, all of that. We have agents doing that.
Yeah.
All of our dev team are using Claude Code or Cursor or whatever the right tool is to test the code, to write code, and the productivity is through the roof.
And this is this growth strategy for you of like a super-powered, relatively small team punching way above its weight.
Well, I think that's where we've started from. We definitely we do need to staff up because we're stretched because the AI only goes so far. But I would say that we have a platform that can be operated by a relatively small crew. I don't know whether you're a Star Trek fan.
I've watched it before.
So the last Star Trek movie, the one with Cumberbatch, where he played an evil villain, he ended up taking control of a spaceship called Dreadnought class.
Yeah.
And it was, Star Trek has lots of red shirts.
Yeah,
right?
yeah.
Usually the guys that get sent down to the planet and they get killed. So this spaceship was built to be piloted and run by 5 or 6 crew. And AI basically ran everything else. And it feels like that's
where we're at now.
That's what we have.
Yeah.
I think we need, we're in the process of raising capital because we need to go faster. We do need more people.
Imagine talk about needing to go faster 15 months in, having achieved what you've already achieved. You never would have heard that a few years ago, would you?
It's just because there are so many opportunities out there. And I think it's interesting. We're in complete contrast to some of these very big competitors. And it's silly for me to say that those firms that I mentioned earlier are competitors. But it's not that we're competing head to head. It's just that the market is expanding, and we can
own your niche,
and we can kind of fill in some of the white space.
Yeah.
And I think going from a 25,000 or 30,000 firm company that has been built up over 20, 30 years and have incredible content assets and very deep client relationships, I think. We're starting at the other extreme.
You and your mates.
And me and my mates and some great engineers. And in a way, it's easier for us to build into the opportunity than I think big firms to kind of downsize or pivot or whatever the word is.
Yeah, I totally agree.
And that creates opportunities for smaller firms, I think.
Yeah. It's a new landscape. I think it's really exciting.
Look, Bloomberg's not going away. I don't believe anyone that says there's a Bloomberg killer out there.
Yeah.
But I think the desktop product is going to look really different in 10 years.
Well, I've had this conversation with a few people recently about that they have to evolve at pace, and I think there's enough smart people there to recognise that that's the way it moves, isn't it?
They have very deep talent, but also some amazing assets. And look, they've built. For example, I built an index business. You can't, everything's hard-coded around a lot of those indices. There's a lot of hard coding. The only thing that has changed, I suppose, is the ability to build competing products. But some of these products are very, very sticky.
Yeah.
Even the terminal, I used to call it kind of corporate bling. I mean, it's a status symbol if you have a Bloomberg. I had a Bloomberg. I was very proud of it. But you only use 5% of it.
Yeah, of course.
And I think that AI is going to open up a space on the desktop that will suck a little bit of attention, and maybe we'll start to include bond calculators and delivery mechanisms. And you've got firms like Symphony, which maybe now this is the opportunity for messaging to kind of start to bleed away, because you can now have other interactions going on around communication. So I think, who knows how it's going to play out, but it's very exciting. It's going to, what I've learned in the last year is everything I think is going to happen in maybe 2 or 3 years' time. And I'm not perfect at predicting the future, but you see the direction, and then suddenly it wasn't 2 years. It was 2 weeks or 3 months. And I was talking about MCP 6 months ago, and telling people about it, and they were going, "What's MCP? Was it MPC?" And now everyone's talking about it. Everyone's talking about how agents can communicate with data.
It's a phenomenal opportunity. I love that you found yourself right in the middle of it. And I wish you nothing but massive luck with it all. So it feels like you don't need it, but I'm pleased to see where it's gone.
I'd like to say you make your own luck, but we couldn't have done this without friends, investors, partners. We're in it to not to win it, but to enjoy the ride.
Exactly, and you're finding that. You're finding the right partners at the moment. You're there on your investment round. If people want to get involved in that, they've heard a little bit today, want to find out a little bit more, what's the best way for them to reach out?
Not strictly speaking allowed to solicit for investment dollars, but do reach out if you want to know more about our growth plans. The great thing on that front is, even though we are a new company, we have a built platform, which is very unusual.
Yeah, absolutely.
And it kind of seems fit for purpose. We've got we've got a growing number of clients, and they're paying us. And it's a competitive world. Market data doesn't sell itself, but it feels like we've got people wanting to help us, wanting us to be successful, alongside all our other kind of fintech friends. It's a good industry. We're all growing together.
Good man. Well, listen, Tim.
Yeah, thanks, Toby.
An absolute
nice
pleasure.
To see you.
Thanks for coming in, and thank you all for watching. We will see you soon on the next episode of FinTech Focus TV. Thanks a lot.